Hi there, welcome to my YouTube channel. So, yesterday I spoke about risk in investment, and I had also promised that today in this video I'll talk about the kind of risks that are associated with investment. Now, like I mentioned yesterday, a lot of it is academical and theoretical, but the intention of this video is essentially to give investors kind of a theoretical knowledge about risk, primarily because I receive a lot of emails asking why somebody would have lost money in the stock market, and he would have done XYZ things and yet he lost. So that's when I talk about the risks that are involved. So I get a sense that these people or these investors are not probably well aware about the risks, and hence they make mistakes. And that's the reason why they lose money. So that's the purpose of today's video as well. So I'm going to talk about 9 types of risks today. So stay with me. If it's boring or if you already know about it, it's fine. It's essentially for those who are, it's kind of a refresher course, I would say. So before we dive in, as usual, please like my videos, please subscribe to my channel, please smash that notification bell so that every time I upload a new video. Please comment on my videos so that I know what exactly you are looking at, and then I can craft out a video based on what you're looking at or what you're looking for. And also share my videos with people who you think would benefit from my video, from my research, and from my analysis. So without further ado, let's dive in. So as you know, before I start, I talk about my ebook. This ebook is on my journey as an entrepreneur. It's titled 6-Figure Corporate Job to Master Entrepreneur. So it starts from the time back in 2010 when I quit my 6-figure globe-trotting corporate job. It talks about the preparation I took to becoming an entrepreneur, the challenges I faced, and how I overcame those challenges. Now, I'm sure a lot of you are looking to becoming an entrepreneur. And to help them, I put down 3 worksheets in this book. So basically to get a sense of your mind, where you stand if you're looking to becoming an entrepreneur. So you could answer certain questions, score points, and you would, towards the end, you would know where you stand on that particular aspect. The cool thing is I scored myself, and you would know, how much I scored. And you would also know how successful I am today as an entrepreneur with 2 companies, one in India and the other one in Singapore, and representations in the US market. So now the cool thing is this particular ebook is available to you, or you can get it for totally free of charge. It's available on my website. The URL is flashing on the screen. I'll put down the URL in the description box below. Click on it, go to the page, put down your name and email address, and the link to download the ebook will be sent to your inbox. I hope you like the ebook. Do give me your honest feedback. Now let's jump into the world of risk. So, what is risk exposure? So, when you invest, you are exposed to different types of risk. And I did mention some of them yesterday in the earlier video. You should know how different risks can affect your investment returns. In the next few slides, we will talk about those different types of risks associated with investments. So let's dive into the 9 different types of risks that I'm going to talk about today. First, market risk. The risk of investment declining in value because of economic development or other events that affect the entire market. Now, this is one of the most important risks. Now, there are 3 main types of this particular market risk. So one is called the equity risk, the interest rate risk, and the currency risk. Now, I'm sure a lot of people are aware of that. So equity risk is what that applies to an investment in shares. The market price of shares varies all the time depending on demand and supply. Equity risk is the risk of loss because of a drop in the market price of shares. Interest rate risk applies to debt investments such as bonds. It is the risk of losing money because of a change in the interest rate. For example, if the interest rate goes up, the market value of bonds will drop. Currency risk applies when you own or you actually make investment in foreign currency. It is the risk of losing out because of that change in the exchange rate or movement in the exchange rate. Second type of risk is a liquidity risk. The risk of being unable to sell your investment at a fair price and get your money out when you want to. To sell the investment, you may need to accept a lower price. In some cases, such as exempt market investment, it may not be possible to sell the investment at all. Let's say when the company liquidates, there is no money for the company could pay you. Concentration risk is the risk number 3. The type of loss because your money is concentrated in one investment or type of investment is concentration risk. When you diversify your investment, you spread the risk over different types of investments, industries, and geography locations. Fourth, credit risk. The risk that the government entity or company that insured the bond will run into financial difficulties and won't be able to pay up your interest or repay your principal amount or whatever that value is. So that's what essentially is the credit risk. So you have to be also very aware. It could be in the form of bonds. It could be in the form of any other instrument. Fifth, reinvestment risk. The risk of loss from reinvesting principals or income at a lower interest rate. Suppose you buy a bond, sorry, the S disappeared, I forgot to type in. Suppose you buy a bond paying 5%. Reinvestment risk will affect you if interest rates drop and you have to reinvest the regular interest payments at 4%. Reinvestment risk will also apply if the bond matures and you have to reinvest the principal at less than 5%. Reinvestment risk will not apply if you intend to spend the regular interest payment or the principal at maturity. Now this is essentially for bonds. Inflation risk, the risk of a loss in your purchasing power because the value of your investment does not keep up with inflation. So inflation has gone down, the value has not gone up. So there's a risk because you have to pay more. The inflation erodes the purchasing power of money over time. The same amount of money will buy fewer goods and services because you're paying more because inflation has gone up. Inflation risk is particularly relevant if you own cash or debt instruments like bonds. Shares also fall into that same category. Seventh type of risk, horizon risk. The risk that your investment horizon may be shortened because of an unforeseen event, for example, loss of your job. This may force you to sell investment that you are expecting to hold for the long term. If you must sell at a time when the markets are down, you may lose money. Longevity risk. The risk of outliving your or your savings. This risk is particularly relevant for people who are retired or are nearing retirement. So you may have, you save money for up to 70 years and you live for 80 years. Then the last 10 years are at risk for you. So that's longevity risk. And the last one is foreign investment risk. The risk of loss when investing in foreign currencies. When you buy foreign investments, for example, shares of companies in emerging markets, you face risk that do not exist. Let's say in Canada, for example, the risk of nationalization. So those are the 9 kinds of types of risks that I wanted to highlight to you. So in summary, every investment is subjected to risks. the fine print says market risk, but I would say all these kinds of non-risks, and you must be wary about these risks and invest judiciously and after doing a requisite amount of research yourself, and so that your investments are safe and you make more money from those investments. So I would also direct you to the video I did yesterday on risk. Go take a look at it because you'll get some sense on that, on risk in investment as well. I hope you get an overall picture on risk. I also did say that I'll do some more talks on risk with probably some financial calculations. I'll do that in one of the videos sometime soon. So thank you very much for listening to me. As you know, my name is Saurav Mukherjee. I'm a digital and technology marketing leader with over 20 years of global experience. I would invite you to go to my LinkedIn profile page. I'll put the link to that page in the description box below. Take a look at my profile. If you like my profile, please go ahead and send me an invite. I regularly work with clients where I try and solve their business, marketing, and technological and investment challenges. If you are looking to engaging me as a consultant in your company, you could drop me a line on LinkedIn or write to me on the contact page of my website. I'll put the link to the contact page of my website in the description box below. Then we can communicate, get into a call, and see how we can work together, how I can help you. So before I go, as usual, please like my videos, please subscribe to my channel, please smash that notification bell, please comment on my videos, and please share my videos. So until next time, please do stay safe and stay healthy, and I shall see you soon. Bye-bye.